talk more about this, join us now Anthony Scaramucci. He's the founder and co-managing partner of Skybridge Capital. He's also a CNBC contributor. And Alexis Goldstein, she's the director of financial policy at the Open Markets Institute. A wealth tax has been bandied about, Anthony, and I've said, well, okay, so let's say you do 2 or 3% on someone's portfolio. If a stock had gone up in a bull market and was up doubled or tripled, and you don't sell it, but you pay taxes on it, what if it goes back down 80%? How would that work in practice? If you get past the confiscatory notion and going, there are property taxes, but for 400 years since John Locke, personal property has been something that you were able to keep once you earned it. So that there's no precedent to just throw that out.
Well, I'm excited that you brought John Locke into the conversation, Joe. I mean, the number one thing here is that it's not really administrable, but the other problem is if you're going to tax the capital after the people have already made the money and had their income taxed, it's going to be a disaster because it's going to cause a misalignment of the way we use our capital. And so if I make the money and decide not to spend it on myself, but invest it in businesses that are going to create jobs for people, they're sort of going to be penalizing that. I mean, ultimately, the society has moved on. They should be using a VAT. A VAT would help us pick up all of that black market activity, all of that cash activity, and they could have some limits on these IRAs, the Peter Thiel situation, where you can make up to $1 or $2 million, but then after that, you're subjected to these sorts of taxes. I don't think it's going to work, Joe. And the good news is we have such a divided government that they'll never get it through.
Alexis, the proponents of it say we levy property taxes all the time, and we're somehow able to do that, and we can figure out what assets are worth. I don't know. Real estate seems different than private companies, and it seems like that's an easy answer, but I don't think it really explains how difficult it would be for a underfunded, what people say, IRS. They already have trouble. How could they possibly?
They already have trouble, and that's part of the reason that the wealthy pay an fairly low share of their taxes, because we don't have audits of people who are extremely wealthy. The wealthy are also able to take advantage of a lot of complex things like proprietorships or partnerships that don't have the same level of there's a tax gap, right, between the amount that people actually owe and they actually pay. And Joe, you mentioned W-2 earners. Those people pay 99% of the taxes that they owe. But wealthier people on the higher end of the spectrum, like Jeff Bezos and the Elon Musk of the world, take advantage of these more complicated things in order to do essentially tax evasion. And I think what's interesting about this segment is less people are paying taxes because a lot of people lost their jobs. And I don't really understand the hand-wringing around unemployed people not paying their fair share of taxes when during the pandemic, we've seen a huge amount of wealth accumulate in the likes of, the Jeff Bezoses of the world, who has readily admitted that his wealth has allowed him to shoot himself into space like some kind of space cowboy because of the people working hard in his warehouses getting injured at a higher rate than everybody else. And I think what's really unfair here is that people like Elon Musk pay a lower rate of taxes on their capital gains on their Dogecoin trading that a janitor who's getting up every day and having a higher risk of exposure to COVID does on their wages. That's what's really unfair about taxation in this country.
What are you advocating, Alexis? Are you a wealth tax proponent? Do you think that that's some way to do it? Or do you go ahead?
Would be a good way to address this, because look at these numbers, right? We have the top 1% pay 27% of the taxes, but that's still lower than their overall wealth. The top 1% have about 40% of the wealth. The top 20% pay 78% of their taxes, but the top 20% own 90% of the wealth. So they're still underpaying relative to their wealth. They're underpaying because, like Joe, as you said, the IRS is underfunded. They can't do audits. They don't want to bother with wealthy people with very rich attorneys who can fight them for many, many years. And that's not fair. And I think a wealth tax would go a long way in helping to even it out a little bit for those W-2 earners who are paying all of their taxes and not using things like, cryptocurrency trading, sole proprietorships, partnerships in order to evade their taxes.
There's a lot to unpack on some of the things you're saying, Alexa. The segments, I don't think, long enough. But the 10% and 1% numbers, you're talking about the tax rates, I think, that they're paying, not the total amount, because the top 10% pay, 70-80% of the total tax bill for the country. They may have accrued wealth, but wealth is, especially in a I've always pointed out that if you're in a zero interest rate environment, for whatever reason, you're going to have an easy Fed, and anyone who owns assets just, in spite of themselves,
7% of people don't own any assets. They don't own any stock market assets. They don't have exposure, right? So yes, it's easy for people who have stock market assets, but it's not easy for the wage workers, the W-2 earners, whose wages are not rising, right? They're all going out to shareholders. They're all going out via dividends, and I don't think that that's fair.
Like I said, Anthony, a lot to unpack there. Where do you want to start?
Well, I mean, the first thing I would say to Alexa, she's right about the middle class. Why don't we just eliminate taxes on them up to $100,000? You could implement that VAT, and then along the supply chain, everybody gets taxed, and it gets taxed reasonably fairly at the high end because that's where the consumption is being done. And then on the corporations, I would say these small businesses shouldn't be taxed at all up to $1 million. Look at what Shopify just did, Joe. We want to encourage commerce and growth and capital activity. And what I would say to the people listening on the left, the money's not in a swimming pool in the backyard, guys, in $100 bills. It's in businesses all over the country, growing jobs and increasing innovation. If you want America to be the bedrock of technological growth and innovation, biotechnological growth and innovation, you have to incentivize this capital to move through the society to take on that risk. Taxing that capital, they'll start moving it into other countries. It's a very bad idea.
Shepard Smith here. Thanks for watching CNBC on YouTube.